right, well, as we mentioned, stocks pushing higher today. Our next guest says there are 3 charts that could tell us where we are headed next. So let's get straight to Mark Newton of Newton Advisors. He's over at the Plasma. Mark, what are you looking at?
Hi, Melissa. Thanks. Yeah, so let's take a look at 3 charts that'll put this rally into perspective now that we've entered the month of September. We still have the ongoing range for S&P. This is something that's really been guided the upside and the downside for this market over the last month. So despite all the issues and the worries that we're all concerned about, policy uncertainty, trade war with China, increasing signs of a slowing economy, the market's been incredibly resilient, still within right now only 100 points of all-time highs. So this is something that in the last couple of days, though, we've seen a little bit of improvement. You saw the concerns about the Chinese trade war and the tariffs. All of a sudden, S&P only got down about 50% of the prior. It didn't get all the way back down. Breadth has started to get a lot better the last couple of days. Today, we saw about 4-to-1 positive breadth versus yesterday on the big down day, it was about 3-to-2 negative. So we're a lot more positive on today's strength than we were negative on yesterday's weakness. Ongoing pessimism. Guy Adami alluded to the same thing. All investors are concerned about all these issues. That sea of pessimism is obviously what can help the market actually move a little bit higher into the first part of September. This is the other one, technology, the largest sector in S&P. This is about 22% of the S&P right now. So it's almost a quarter right now of the S&P is technology. Until we see some evidence of technology breaking, this is still going to serve as a tailwind for stocks. The stocks today closed at the highest level since late July. We saw stocks like Western Digital, Seagate hit the highest level of the year. Intel had a very, very good move. Good signs of Facebook also starting to claw off the bottom. And this next stock, which I'll show you, I think is really the key to the whole puzzle, which is Apple, of course, a $1 trillion market cap stock. This has formed a very interesting technical pattern, which is a symmetrical triangle on the heels of a big rally. In technical analysis, we know that about 80% of the time after a big run-up, these triangles oftentimes are resolved by a movement to the upside, not the downside. So my thinking is it's a huge constituent in XLK, obviously S&P, the Qs. Right now with charts looking very bullish on Apple, at least for a breakout to the upside, I don't really want to be betting too much on the downside just yet. You want to see a break in technology. You want to see a return to that pessimism, a return to optimism. Right now, potentially this Hong Kong extradition being put off could be the start of that. If S&P breaks above 2940, that's a key resistance. We might get up to 3,050, 3,075. That's really my target. I expect that sentiment will start to get more and more bullish. If that happens towards the Fed meeting, that would be a time to sell into this, But for now, it's really right to bet on this 2940 being exceeded, in my view.
2940. All right, so that's almost where we are right now,
right.
So a little bit higher. All right, Mark, thank you. Mark Newton of Newton Advisors. Tim Polahicki today on Bespoke made the point that we've been basically at or around 2,900, up and down from there.
25 sessions in this
past
range.
Month or
Yes.
so. Yeah. So are those charts convincing enough to you to say, yeah, we'll go higher?
Well, I think what Mark's pointing out is, again, if you're drawing that trend line off of those lows, despite all the volatility, and to be clear, in this 150-point range on the S&P, there's been a lot of volatility. There's been a number of days that have been plus minus 1% days. But ultimately, I think if you look at where the market has digested the yuan, digested the dollar, digested yields, which, by the way, didn't break out today despite the market stayed at 147 on the 10-year, I think that's bullish. I think sentiment, which had gotten certainly a month and a half ago, was way too bullish, certainly overly corrected to the downside. I think the risk is the upside. You break through that resistance where you've been beating up there probably 11th time today. You failed at 2940. That's bullish.
I just kind of, we talked about Apple. So I'm not a macro trader, but I am long Apple. And, I'm nervous because I do think there's someone in the crosshairs of trade. However, I do want to own it. I'm willing to ride some volatility, which we've seen, and we may see more. I believe in the evolution of the story, and I want to be there for 5G. I don't know when we'll really see that start to get going, but I'm not going to be good at selling it before that and hoping it trades down and buying it in front of that. So I'm hanging on and nervous, but I want to be long.
Look, I think the bull case is you understand the president has the market. I guarantee he watches it all day long. He's laser focused on it. If it gets to a certain point, he's going to do whatever needs to be done to get the market higher. I think that's part of the bull thesis. I think that's legit. I think then the other side of the coin is, we just looked at a chart, looks like it's breaking out the upside. We had BK here and Carter Braxton Worth talking about the megaphone of, was that what you called it?
Yeah, that's
megaphone
right.
of death. So you can look at the same chart and have two different outcomes. I look at the world, I say it all the time, I'm predisposed to be negative. I've said that from day one on this show. So I always look, what can go wrong will go wrong. And I look at all the headwinds out there and say the VIX at 17.5 is too cheap, and there's another leg lower in the broader market.